Hey, welcome back subscribers to my world of stocks. In today's video, we're going to cover some very important topics. I want to give you guys an update on the stock market, what the new China deal means for it going forward, and what we as investors need to do now to prepare for what's coming ahead, considering that the market has already recovered from those April lows. So smash that like button if you enjoy the video, and thank you for that support. It means a lot to me. Let's go ahead and jump straight into it, guys. Now, just to catch you up a little bit on what's been going on here in the market, back when new tariffs were announced around the start of April, everyone was panicking and the stock market was completely tanking at that time. Well, I put out several videos telling you guys three specific things. Number one, that this was a giant market drop that is not to be ignored because we saw unbelievably low prices on even the absolute best stocks in the entire world. In fact, at that time, the Dow Jones had suffered one of its top 5 biggest point drops in history, while the tech-heavy Nasdaq suffered its worst drop ever. It was record-breaking. And not only is that a major crash for the market, but individually, many stocks took an even worse beating, with some even being down like 50% from their highs this year. So it was a major downturn that we saw with stocks. And when looking at CNN's Fear and Greed Index, it was at some of the lowest readings ever at just 5 out of 100, which is almost as deep as you can get really in the extreme fear category. So in turn, I told you guys the second thing here, that this was a massive buying opportunity. And, I did get a lot of criticism for that because, as is often the case, when the market is falling hard and all the media is kind of constantly selling everyone fear in the news, people do start to panic. They sell their stocks even for a loss many times. And then understandably so, they don't really want someone like me going out on the internet telling everyone to buy when they had just sold all of their own positions, which, by the way, I am very sympathetic to. I don't want to, make anyone feel like they made a mistake. And I certainly don't want to be, like kicking anyone while they're already down. But I was just trying to do my job at the time, which is to give you guys the unbiased facts and let you know what I'm always doing myself. For example, I told you guys that the market always rebounds, and it's usually much sooner than you expect. In fact, one of the charts I showed you was this one here, showing the top 10 largest single day drops in over 5 decades, which were among the absolute worst times in our history. I mean, you're talking peak fear on huge economic disasters, with some people even thinking that like the world could be ending. And yet 9 out of those 10 times, the market skyrocketed within the first year following that drop. In just 1 year, you already saw giant market rebounds of around 20 to 70% gains. Absolutely mind-blowing. And so my message to you guys was that, look, I know this is a scary situation and there will be a lot of volatility and things, could get worse. But if you can put your fears and even, some of your political feelings aside and just look at the situation logically, seeing stocks go lower in price, it's probably going to end up being one of the best times to go out there and be buying stocks the more that they fall, rather than, actually selling them for sometimes even a loss. And that led to point number 3, which is that we had even really seen this before too, recently actually. So we knew exactly what to expect, and yet, people still didn't take advantage of the opportunity. But for example, during Trump's first presidency, he literally did the same thing. He started going after China and he announced new, guess what, tariffs, to which the market plummeted on the news and everyone panicked about an escalating trade war between the US and China. But back then too, I told you guys the same thing, that this always happens in the market. There's some new fear pumped into the market that sends prices crashing. The rich elites go out there and buy all the stocks on the dip. And then as soon as things calm down economically and, maybe some new announcements get released, some new deals, and people just kind of start realizing that it's not the end of the world, then the market comes roaring right back up and the rich end up getting richer. It happened back then, and sure enough, it's happening again now with new deals getting announced this past week with not just China, but even the UK and some other progress being made with other nations too on the trade front. And as a result, the market has completely gained back all of those losses from April. In fact, the S&P 500 is actually up since the end of March by over 4%. while the NASDAQ is up even more at over an 8% rise during the same time too. And obviously from the lows, you're talking gigantic gains of over 22% for the broader index. And individually, I mean, I've seen some of my stocks rise even more, like 30 to 40%. I mean, we're talking huge gains here. Now, I'll get into what this means going forward for the market and what we need to do as investors now. But first, let's just take a quick look at this new deal with China to see what we're dealing with here exactly. So this coming from Reuters, China and the United States announced a truce in their trade war on Monday after talks in Geneva, that's in Switzerland, that will roll back the bulk of tariffs and other countermeasures by Wednesday. The United States is dropping the extra tariffs it imposed on China this year to 30% from 145%, while China is cutting them to 10% from 125%. And tariffs imposed before April 2nd, including those dating back to Trump's first term and other restrictions, appear to remain. So to be clear, now, this is only going to be a pause in tariffs, and it's for 90 days while they continue negotiating. But in my opinion, this is still a giant positive sign. Now, why is that? Well, because America has obviously felt for a long time that they've been taken advantage of by China. So they still want some big concessions to be made by them. But at the moment, guys, we were talking about massive tariffs of 145 and 125% respectively. That's just way too high to ever do any kind of business together. And so the market reacted accordingly to the downside, because it knew that at that high of a level, the world's two biggest economies will never be able to function together, and it just kind of ends up hurting everyone. So the solution now, a diplomatic one, is that, we both kind of come to the table and say, look, this isn't going to work. Tariffs are ridiculously high. Obviously, the two biggest economies in the world need to get along to some degree. So let's just put a 90-day pause on this like we did with other nations, right? Let's extend that to China. And meanwhile, we'll work together on getting some new deals done, all while allowing business to resume and, not completely destroying the world economy. However, here's the kind of crazy part. In the 90-day pause with other nations, America lowered it to 10% for them. But with China, they only lowered it to 30%. So even though we're going to be negotiating new deals that should end up helping the US long term, in the meantime, we're still going to be raking in billions of dollars on 30% tariffs. So if you ask me, I kind of feel like America just got away with slapping some pretty huge tariffs on China, all because we went, as high as 145%, but then lowered it to 30% and made it seem like, we're actually being nice about it. But instead, we're actually slapping them with huge tariffs still. Now, to be clear, I do still think that a new deal will get done before the 90-day period ends, which would, resolve a lot of this. And obviously, China would want that too, which is why they're actually going along with it for now. And don't forget, America is really like the world's consumer. Everyone wants to sell here because we have the money to be buying everything. So that's why all these nations are kind of going along with it and, conceding ground, ceding ground, and they are willing to kind of come to the table and negotiate. And of course, we want them too, right? America wants them too. They want to be able to buy cheaper products, and they want to be able to sell to those other nations too. So there's a lot of things that, at the end of the day, the world is so globalized that countries need to be getting along. But the reason why I think this ultimately benefits America so much more, obviously, is because the higher tariffs will still convince companies to be moving at least some of their manufacturing back into the States, because there are still some pretty high tariffs out there, which we've already seen in many different earnings calls and reports this season, right? Like, I've been looking at tons of earnings reports, tons of earnings calls, and management. Everyone, all these companies have been talking about, at least in some form, bringing back at least some of their manufacturing, investing in new manufacturing here in the States, or at least kind of moving it around the world to other nations that are maybe less hostile or have less tensions than like with China. Like, for example, moving manufacturing like to India or to Vietnam, or, doing stuff with Japan, different things like that, right? And we're also making huge progress on new deals with all of those nations too. But all the meanwhile, we're also taxing China, and we're working to get better deals done with them too. And ideally, we would be opening up their economy to more of our exports as well. That's going to be a big, because obviously there's a big trade deficit. So you want to be selling more to them as well and to other nations too. So all of that I just think is a net positive, in my opinion, longer term. However, that doesn't mean that there won't be some short-term issues along the way, especially with the market having already rebounded by so much. So here's just 3 kind of quick points that I think investors need to be aware of right now and take action on going forward. Number 1, you should know that even though the market has been climbing a lot, first of all, let's just get this out of the way. There are still plenty of great deals on individual stocks out there to be found. So don't feel bad if you kind of missed out on any great deals on any of the bottom lows. I've been putting out tons of videos still showing you guys that there are plenty of stocks out there that are undervalued. For example, the newest stock that we added to the community portfolio recently was PepsiCo. Super strong, very reliable company, huge company, who's also a dividend king, meaning they've even raised their dividends every single year for over 5 decades in a row. And yet the stock right now is down about 1/3 of its value from the top, leaving their PE ratio actually cheaper than the sector median. And I'm not sure that I've ever seen that before with Pepsi. They usually trade for a much higher premium over the market. And the dividend yield has also risen above 4% too. Again, that's something that I don't think I've ever seen before from them. And it's even higher today than it was during the Great Recession. So that screams deep value. And so again, just remember, if you didn't take advantage of the April lows, that doesn't mean that you can't still find some great deals on some great stocks out there. But that leads me to point number two here, that the market will still be very volatile this year regardless. And there will be very likely new dips and lots of buying opportunities that you also need to be ready for. Because although the tariff truce with China is a very welcome and positive sign, it's only a pause. And we still have, like 30% tariffs on them too. So company earnings are still going to be very heavily impacted going forward. Plus, it's not going to be easy for these other corporations to just all of a sudden move around huge manufacturing so quickly, either back to the US or elsewhere. It's an extremely expensive process that could even take years in some cases. So I'm just telling you now, be prepared for when Q2 earnings come out, Q3, Q4, we could still see many great stocks taking big tumbles this year because of expenses from tariffs, because of having to move around manufacturing, that being super expensive for them. Not to mention that we could also go into a recession if companies are less profitable and higher prices are starting to get pushed onto consumers and they start spending less. It wouldn't surprise me at all that a recession, could still very easily hit at any moment this year, and that would obviously drag the market down too. So it's something to be aware of. And even with the pause in the tariffs for China, during these next 90 days, I think it's more than reasonable also to think that Trump could at any moment come out and say some negative things that escalate tensions right back up again with China. Like, it wouldn't surprise me at all if at some point he even says that he's thinking about raising the tariffs right back up and then the market falls again as a result. Again, just kind of knowing how Trump operates, that's something that is very possible. But that leads me to point number 3. And that is to make absolutely sure that if the market does fall heavily again, which I think at the very least it's going to be super volatile, but let's say we have another big plummet, you can't be afraid to take advantage of those opportunities. And look, you should always do your own research and make your own decisions. Don't ever just blindly copy what someone else is doing out here on YouTube. But for me personally, you guys know what type of a long-term investor I am and how optimistic I am about the US markets long-term. So I can guarantee you that if the market falls heavily again this year, I will be there on every single dip buying more stocks. I'm going to be buying stocks regardless because I'm always kind of a net buyer of stocks. But on the drops, whenever prices go down, I buy much heavier. I increase my buying whenever prices go lower. And that's something that has, always worked out for me. It's what I've always done, and it's what I'm going to continue to do in the future too. And it's what you can always expect from me and expect to see on this channel too. But hey, I'd love to hear from you guys. Let me know how you're all feeling about these new developments down below and what you'll be doing yourself. I'd love to hear your thoughts, but I hope you're all doing well regardless. I'm going to be here all along the way, updating you guys, putting out new content for you. So I hope you're enjoying it. and I will catch you in the next one, my friends. I hope you're all doing well. Take care out there. Bye-bye.